Hello and good morning, folks. Tuning into the Fintech Brunch ICT Compliance hosted by BCCS Cluster and Fintech LT, powered by the Agency of Science and Innovation, MITA. I am Andris Petkevičius, Managing Director at BCCS Cluster, and I will be your host today. The European Banking Authority has upgraded its requirements for fintechs, credit institutions, investment firms, payment service providers to ensure a consistent and robust approach across the single market. In light of other regulations such as GDPR and PSD2 and other requirements for fintechs have never been more complicated and interdisciplinary. Join us in today's morning seminar to hear what motivated such requirements and, more importantly, how to address them in practice. During this session, we will share presentations to review the main ICT and security risk management requirements and share practical insights and best practices. Do make sure to leave your questions or comments as we go along the way, and we will try to answer them in the second part of the seminar. Today, we have fantastic speakers, and I would like to introduce you to them. Please meet Kipras Tamašauskas, IT Security and Operational Risk Officer at Creda. Hello, Kipras.
Good morning, everyone.
Thank you, Kipras. Hello. And Donatas Šliora, Partner Attorney at Law at Adon Legal. Hello, Donatas.
Hello, everyone.
So thank you, everyone, for tuning in today. And Donatas, maybe we could start off with a presentation for you. And I'd like to ask you to maybe also introduce yourself briefly.
So hello, everyone who has joined this webinar. I'm a lawyer, not an IT specialist. I'm attorney at law working in Adon Legal, a law firm that concentrates mostly on financial service regulation and support financial institutions. My knowledge of the ICT-related requirements are based on my experience of consulting on internal documentation of financial institutions in this specific area. Therefore, today I will try to cover the legal background of ICT requirements for financial institutions, as well as to point out some of the most common mistakes of financial institutions when establishing or revising their ICT frameworks in line with the new requirements. So I think I can start sharing the presentation, which I have prepared. So can everybody see it?
Great.
Yep. So I will start with the description of the new requirements. As you know, everybody participating in this webinar most likely already knows, the Bank of Lithuania has adopted a new set of requirements for financial institutions on the ICT and security risk management. What is often overlooked is that these requirements apply not only to traditional payment service providers, such as payment institutions, e-money institutions, banks, credit unions, or central credit unions, but also to financial brokerage firms. Although the description entered into force in January earlier this year, the financial market participants, at least in my experience, still struggle to adapt to them. As the requirements are rather complex and need a significant amount of work to be put in. It should be also mentioned that these requirements came into force at the same moment as the new rules on corporate governance arrangements, rules on outsourcing of operational functions, that also need significant attention on financial institutions. And having all of these areas addressed at the same time is often challenging for the companies in practice. So moving to the next slide. To be able to understand the logic of the requirements, we need to understand where they come from. Lately, the regulatory pressure on the financial institution tends to increase as EU member states seeks to harmonize their approach to supervision. Recently, financial institutions had to revisit their practices related to anti-money laundering, clients' fund safeguarding, internal governance, and now it seems that the time has come for the financial institutions to address the risks related to their IT systems. This seems only natural as the IT systems has become the core aspect of the operations of almost any financial institution, and the popular fintech companies. There is also a clear shift in technologies. Everybody is moving to cloud-based technologies. Moreover, there is a rise in cooperation models between financial institutions as well as financial institutions and third parties that depend almost exclusively on IT solutions. So the requirements established under the description of information communication technology management follow directly from the European Banking Authority guidelines that were adopted in 2019 and actually came into force in June 2020. However, they were not given sufficient attention at the time by the financial market participants, and now everybody struggles, to follow the Bank of Lithuania requirements. And the third source of the requirements is naturally the good international practices and standards. In my personal view, most of the employees of a financial institution should familiarize with the European Banking Authority guidelines, as they provide more background and allow for better understanding of the expectations of the supervisory authorities towards the financial institutions. And the description approved by the Bank of Lithuania should be considered as a manual listing specific requirements that need to be followed. So what needs to be addressed? Today, I will not go into detail on the requirements established under either the description approved by the Bank of Lithuania or the European Banking Authority guidelines, as each topics covered there deserves a separate workshop. Nonetheless, to get a sense of what is actually needed, we can go over the categories of the requirements. And those categories generally are ICT and security risk management, that concerns the direction chosen by the company in the long term, as well as the internal governance arrangements, including 3 lines of defense model, reporting to supervisory authorities, and other aspects of organization. The other category of requirements relate to information security, including cybersecurity. Then we have ICT operations management, ICT incident and problem management, which includes, for example, the procedure for monitoring, handling, and following up on security incidents. Then we, of course, have the ICT project and change management that deals with ICT systems development, acquisition, and other change-related matters. We also have business continuity management, which is not a new thing for any financial institution already, as well as payment service user relationship management, the objective of which is to raise awareness of a client on possible risks. So what obstacles do the financial institutions face when trying to implement these requirements? Although the resolution of the Bank of Lithuania is rather new, the problems faced by the financial institutions when trying to comply are not in any way unique. Most common mistakes of the financial institutions when establishing or revising their ICT framework is not having a clear plan for the structure of the documentation, narrow view of the regulatory requirements, and third but not least is the copy-paste approach, which often leads to failure to adapt the documentation to the needs of the company. So now we can talk about each of the mistakes in more detail. So the first mistake, not having a clear plan for documentation. The description itself, approved by the Bank of Lithuania, refers to approximately 20 various strategies, policies, procedures, and processes. In our practice, we often see that documents that make up the ICT framework are sometimes inconsistent and incompatible between each other. For example, the same aspects of operations are regulated differently, different terminologies used, reporting lines are also inconsistent. To avoid such situations, it is always best to decide on a clear structure of a documentation before creating or revising it. In my view, the most simplistic approach is to have the list of documents based on their level and purpose, starting from strategic documents moving to policies, and then to procedures, processes, manuals, and working instructions. In case of ICT and security risk management, we would start with the ICT strategy and then move to the information security policy, the IT project management policies, and other documents. The list of documents which are prepared in the company depend significantly on the approach taken by such company, because you may choose to have a number of separate procedures to address each separate requirement, or try to consolidate those to a more general procedures and manuals. Financial institutions should, in all cases, ensure that the lower-ranking documents conform the higher-ranking documents, follow the principles and the terminology used in them. So the second mistake that we have is a very narrow view of the regulatory requirements. We faced it when reviewing the documentation related to ICT, and we see that financial institutions often fail to coordinate ICT-related documents with other internal documentation of a financial institution, or they fail to take into account the regulatory requirements that are not specifically listed in the description on ICT and security risk management. There are situations where the ICT documents are prepared by the IT experts in the company who fail to take into account regulatory requirements outside the scope of their expertise. For example, they are not familiar with the new rules on outsourcing of operational functions by financial market participants, or good practices when it comes to internal governance. On the other hand, preparation of all of the documents by compliance specialists that lack IT knowledge could also lead to a failure. Therefore, it is strongly advisable that preparation of ICT-related documents would be a team effort, and specialists having different competences in technology, legal compliance, and risk management would cooperate on them. And the first and most important mistake that is often done by the financial institutions is the use of the copy-paste approach and failure to adapt the documentation. It is not rare that financial institutions choose to base their internal policies on either publicly available documents, some sample documentation that they get a hold on, or standard document packages offered by some service providers. This is not a worst approach. However, in practice, it may lead to some problems. Such problems are inconsistencies between the internal documents, the examples of which we have already discussed earlier. The second issue is a failure to adapt the framework to the business model, services, IT architecture of the company. The rules and procedures that are adopted by the financial institution should be flexible enough to avoid the need to consistently revise them. However, the realities of the company must be addressed. For example, the IT project management policy may differ significantly between the companies based not only on their size, IT department capabilities, but also, for example, outsourcing level. And the third drawback of the copy-paste approach is that the companies often fail to apply the principle of proportionality that requires the institutions to have ICT and security risk management system that is proportionate to the institution's size, organizational structure, to the nature, scope, complexity, and particular services that the financial institution either provides or seeks to provide. As a result, this may often lead to overcomplicated procedures which cannot be adequately implemented in practice by the company staff. In my view, it is much better from the compliance point of view to have simple procedures that are followed perfectly and are well documented, compared to elaborate procedures that are often overlooked in actual operations of a financial institution, either due to the lack of knowledge of the procedures by the staff or the time needed to deal with the excess documentation. It is often the case that, if you use the copy-paste approach, you will not have sufficient time or interest to continuously revise those policies in accordance, to the change of your business and change of the IT environment as well. So These are the three main mistakes that we see in our practice, and these are the lessons that can be learned. Naturally, what is not mentioned in the slides but is a must, it is a need to comply with the policies once they are already prepared and approved. This is needed not only to avoid regulatory sanctions, but also to avoid actual ICT incidents, which may lead to much more devastating results to the companies. And you have to continuously review and revise and address the ICT risks as any other risk that is faced by the financial institution. So from my side, I think that's it. And I would give a word to my colleagues.
Thank you so much, Donatas, for the excellent presentation. Again, to our viewers here, if you have any questions as our speakers give the presentations, do make sure to leave your questions or comments in the chat, and we'll answer them. So thank you again so much, Donatas, and please, Kipras, could you introduce yourself, and we look forward to your presentation.
All right. Good morning, everyone. I want to thank everyone here for joining us today for the first event in hopefully the long and fruitful series. And especially, I would like to thank BCC Cluster and Andrus for inviting me and for being so keen and persistent on me speaking and sharing my experience. And my name is Kipras Tamashauskas, and I'm an IT, security, and operational risk officer at Creda. And Creda is a financial institution operating in Lithuania under a license of Central Credit Union issued by the Bank of Lithuania. And we also own a Dakar racing team. And my job, to put it simply, is to make sure everything runs smoothly and the group is compliant with the requirements applicable. I am sure everyone who works in finance is fully aware of those institutions controlling us, and I shouldn't get into much more detail. And I'm a very practical guy. I'm a very practical person, and I believe no one here likes the excessive bureaucracy just for the sake of bureaucracy, compliance for the sake of the compliance. And I'm here to tell you my story about a systematic approach to ICT compliance and how it can be very crucial and how it can change the way we do business, especially in these times, and how it can help us move forward as a specialist, as teams, and do our job properly. So I have joined my Creda team in February of 2020, and a very funny thing happened the same month. It was the first COVID quarantine, and on a very short notice, everyone had to start working remotely. It is a huge challenge for a regular team, for regular IT team supporting the company and their operations. And I was just warming up. So we had little to none actual documentation about our systems, and existing one was outdated. And this comes to IT documentation, security policies, procedures, business continuity, and so on. And it was barely reviewed, and it was barely practical. And there is a reason why we should do that at least annually, and not just for sake of compliance, but for the sake of business. And to make it short and simple, we started testing our business continuity plan while it was still mostly in my head. And the only way out of a mess like this is to improvise, adapt, and overcome, and do it fast. At this point, a systematic approach and risk-based approach so much sense you cannot imagine. We all have priorities, limited resources, limited staff, and finance, even for financial institutions. Usually, we set our priorities for audit, implementations, and other projects based on the outcome of risk assessment. And now we have performed the risk assessment in probably the shortest possible manner. It took me like 5 hours with technical steps to keep the operation going, communications plan, and everything just to keep us afloat in this hour of the unknown. And I was expected to be the single person knowing it all, and I had to cherry pick information about processes, systems, tools used at every department. And a funny thing, different people imagine and interpret risk very differently, and it depends on experience, on the background of the person, and on how keen they are to perform on their duty. Same question about priorities and processes, and two different departments working in the same office give you two different pictures. It, it depends on numerous factors, but in the end of the day, every department thinks they are the most important. They are doing the most important role, and they are keeping the business afloat. Of course, they are not wrong. For example, customer service told me that a 3-minute downtime would be critical. And a lady from the finance pointed out that her critical system, which must be always on and available at all time, uh, needs to deliver a report every 6 months, and she needs that running all the time just because. And worst case scenario, if you're late, you might be fined up to 200 euro. So you can imagine my reaction. And here comes the almighty euro. When performing a risk assessment, uh, we have to take a holistic approach. Well, that's what I think. And one thing that all companies, departments, institutions have in common is money, and it helps us agree on what comes first and what risk is important and what can be left for tomorrow. And it is done in the most possible holistic manner. So we can measure impact, control, even risks. Everything can be done in euros. And this holistic risk-based approach with zero tolerance for nonsense has been going ever since at Creda. Based on this, we are reshaping a company, actually a group of companies, to a very modern financial institution. We are implementing controls we probably did I probably did not imagine, and everything is both flexible when it comes to change and very, very resilient when it comes to negative events. And after finishing just one project, I usually see a few steps ahead and plan further improvements, but everything must follow business logic. There is no IT for the sake of IT, and uh, security for the sake of the security, because if there is no business in there, it's just a hobby. And even after a year of intense work upgrading and managing our ICT part of organization, I do get better and better insights, better and better processes, and better documentation. And most of the companies I have worked with prefer a very symbolic and annual review of the processes of documentation. And most of the time, it is just for the sake of compliance. Uh, I think it's for the sake of business. And normally, I would I would do the same because I would be going for result. But fortunately, I happen to be in position where continuous improvement of these controls, which may seem bureaucratic and sometimes excessive, can be very, very crucial at those sensitive moments which have happened in the past for most of us. This led not only to smooth sailing during the unpredicted storm, but also enabled taking company to another level of security, flexibility, and technological advancement. So my main message when speaking to all of you is that we operate in a very special kind of business. Finance is not selling hot dogs or chips, and people and businesses rely on us and on our services daily. We bear this responsibility of business continuity, of protecting their assets, and following these requirements that my colleague Donatas and Andrews spoke about in a very systematic, a very professional and business-minded manner can help you benefit greatly. So this is my short message about ICT compliance. And if you have any further questions, I will try my best to answer them. So thank you very much. Andrews, back to you.
Thank you so much, Kipras, for the excellent presentation. Maybe just a general question to both of you, Donatas and Kipras. If you could shortly give a few key takeaways for ICT compliance, what would they be?
So I tried to give those takeaways during my presentation as well. The key point from my perspective is always planning ahead and also seeking to ensure that ICT is not a separate matter in the company. It must always be coordinated with all other business processes and all other interests that are in the business. So it must be viewed as one of many risks and should not be given the status of some secondary risk that is dealt with, as Kipras mentioned, only for regulatory purposes and is not important for the actual longevity of the operations of financial institution.
Thank you, Donatas. Kipras, what are your takeaways?
I would like to join Donatas in saying don't copy paste, don't take a copy paste approach. Or if you decide to take a copy paste approach, do it properly, build your processes around the policy, then you copy it. But you don't want to get into a situation where you think that you have bought some sort of security. It should be earned and implemented properly instead. Every business is different. We try to compete, we try to overcome our competitors, we try to offer our customers something else, something better, and it comes with business specifics. Of course, we are highly regulated businesses, but please do it properly. Like, take your time, review it for a week, a year, and it's going to be so much easier in those critical moments. You will have a few less of gray hair.
Excellent. So thank you guys for tuning in to today's seminar, and a big thanks to Kipras and Donatas for the excellent presentations, as well as Agency for Science and Innovation, MITA, for helping us set up the event. Do make sure to follow BCCS Cluster on LinkedIn, and also feel free to get in touch with our speakers today if you have any questions, or BCCS Cluster as well. I wish you all an excellent day ahead, and I'll see you guys soon.